All right, in this video, in this quick video, we are going to briefly describe the kind of underlying reasons of why any kind of financial asset moves in price, right? Now, you might have heard the kind of this thesis of like the efficient market hypothesis, right? Where these bunch of kind of academic scientists and researchers did some studies on the markets, the financial markets, and concluded that, markets are efficient and that outside of this efficiency, everything is kind of random. Price movements are random, right? If a company's, fundamentals, earning power increases by 20%, naturally the price of that stock would correspondingly increase 20%, right? But in this video, we are going to present another side to this thesis and basically describe why the efficient market hypothesis is very wrong. So, if for anyone who actually has traded money in the markets, uh, they, they will have they will tell you that it's things are not random, right? There's always what I call an agenda. There are oftentimes an agenda behind why things move. And the reason why that is because at the core, all financial assets are manipulated. And so what does that mean? Manipulation has this negative connotation, right? It reminds you of this kind of like this puppeteer in the background, like controlling prices and manipulating things and people. But if you view it from a different context, all that manipulation means is that there is an agenda, right? There is a reason why something is moving. I'll get into a couple examples later on, but the point is, if you can understand why the reason behind a move, you can capitalize on that move, right? Uh, Understand the agenda, and you can basically figure out a way to bet in order to capitalize on a move. And so, as I mentioned in one of my previous videos, all the financial markets are is simply a casino, and you are betting for one kind of thing over the another, right? Are you betting that an asset classes goes up? Okay, you're longing in asset class. You can also bet the exact opposite, right? That a stock or another asset goes down in price. That's called short selling, right? And so the difference between a trader investor and these kind of these academic researchers is that the 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 trader investor actually has risk and has skin in the game, right? It's like the researcher can all day, do these kind of studies and look at books, reading analysis and stuff. But at the end of the day, there's a vast difference between someone who reads and watches documentaries about going to war versus a soldier or a general who is actually involved in combat, right? And that is the difference between an academic researcher and a trader and investor. And so going back to examples of manipulation, right? You see this across all asset classes, right? Governments and central banks, they manipulate the foreign currency markets in order to prop up their currency, right? You don't call it manipulation, they just call it, keeping the currency steady, right? But there, for example, Russia, right? When the Ukraine-Russia war started, the Russian ruble just basically tanked in price, right? How did it miraculously recover to now at this point being stronger than when the war started, right? It's because the Russian government, or their central bank, deployed foreign currency reserves in order to prop up their currency, right? And there is no free market for the Russian ruble because there are various capital controls that prevent Russians basically from taking their money out of the country, right? So they're essentially manipulating their own currency in order to prop it up, right? And so free markets, as most people kind of imagine it to be, uh, do not really exist, right? I would say that capitalism as a whole in today's society does not really exist in the traditional sense of free markets, especially with the increasing kind of power of the central banks. And so central banks as a whole manipulate the general economy, right? with they have multiple levers to, specifically with interest rates, right, and quantitative easing to basically manipulate and prop up the markets, right? For example, when COVID hit in 2020, right, all assets basically just nosedived, right? Apple, like, I don't know, dipped like crashed like 30, 40%, right? Miraculously, 2 months later, Apple is trading at like it's up 40%, right? From before COVID. Why is that? It's because the central banks set interest rates to zero, right? And you have all this kind of funny money going around the system looking for places to park their money. So naturally, all this free money that the central banks printed out of existence went into the stock market instead of Apple, right? You can't tell me that with COVID and all these lockdowns, the price of Apple being up 40% is justified by its fundamentals being up 40%, right? That's just one another example, right? Now, so nowadays in the current economic environment, the central banks, are tightening monetary policy, right? What that means is that they're raising interest rates in order to basically calm inflation, and you will literally see Jerome Powell put out. He says this like out in the open. His mission is to basically reset the housing market. What that means is he is purposely and intentionally going out of his way through, raising interest rates to crash the crash the housing market. He literally says this, right? Because housing uh, has become unaffordable for kind of the average working person, right? And so these are kind of macro level types of manipulation. This happens at the micro and the medium level, right? Hedge funds and institutional banks, they manipulate stocks when they're about to IPO, right? They sell this narrative of this hot stock so that investors buy in, so that these companies can dump their shares on this on new investors, right? This is the name of the game, and it's something you just have to accept, right? You can either, rant all day about how the manipulates, how the banks, how the investment funds, how Wall Street manipulate the financial markets, right? And the average person is screwed. Or you can learn how the game is played so that you can capitalize on this and make money for yourselves, right? Another example, venture capitalists, right? They put money into these extremely risky early stage companies, right? Let's say one venture capitalist invests in this company at a $20 million valuation. What is his job? His job is to basically sell this narrative, quote unquote, you know, pitch it, in other words, pitch it to his investment friends and at other venture capital firms so that he can sell his stake at a higher valuation. He got in at 20, right? His job is to manipulate the agenda, manipulate the story, and kind of the market sentiment so that he could sell his shares that he accumulated at 20 million at a higher valuation at 50 million, right? This is the name of the game. Venture capital in a nutshell is just hot potatoes, right? They're just these VC guys just, they're just like passing around their stock, and hopefully at each subsequent round the valuation of the company raises, right? The first fundraising round, seed round, a company may raise money at like a $5 million valuation. Series A, they raise money at a $20 valuation. Series B, $50 million valuation, and so forth. Right? What is the end game of the venture capital type of investment strategy? Right? It's to basically IPO the company and to basically dump on retail. Right? So after a series of private investment rounds where they, raise money at like a $50 million, $100 million, et cetera, valuation. The last step is to basically sell this previously private stakes that retail investors don't get access to, right? The last step is to basically sell that on the public markets, let's say the NASDAQ stock market, right? And so throughout this entire process, nearing the IPO phase, they're engaging investment bankers to basically get ready to hype up the narrative so that these guys can exit their stakes that they accumulated at a lower valuation and just dump it on retail, right? The stock IPOs at $1 billion valuation. Well, guess what? The VCs are in at a $50 million, $100 million valuation. So what happens? What do you think generally happens when a stock IPOs at a $1 billion valuation, right? These insiders and these venture capitalists are all dumping on the public markets while the retail investor is getting hyped up by this agenda, by this news, right? And so just it doesn't mean that you can't buy an IPO, but generally be on the lookout, be aware the hidden kind of game that is already being played, right? The initial public offering is not initial; it's just initial for retail. But before retail investors get in, institutional investors are already up 5x, 10x, 100x, right? So this is a last example of kind of some strategies that I trade, how I take advantage of these manipulative agendas and narratives in order to basically make money on a daily basis, right? So the companies that I trade on a daily basis are small cap companies under $2 billion valuations, right? I'll do another video of why I think for the retail investor, anyone with like a bankroll of under 3 to 5 million, there's a specific niche market asset class that's ideal for retail investors to trade. So going back to what I was saying earlier, uh, this kind of niche market of these companies under $2 billion, $1 billion valuations. What is the agenda at play, right? These companies are, struggling to. They're not, the established business like Apple or Tesla, right? They're still kind of trying to find their way and try to get their businesses kind of established, right? So many of these companies are losing money, especially these biopharmaceutical companies that have to spend a lot of money on kind of research and development, right? So these companies cannot sustain themselves because they're just bleeding money, right? Trying to get their business up and running. So what is the agenda? These companies need to basically raise money through the public markets in order to keep their businesses alive. So what do? When these companies are starving of cash and they need to raise cash, they need to uh, raise kind of public awareness, right? So what happens? This company puts out quote unquote positive news for the markets to see, right? Let's say a biopharmaceutical company has some kind of drug approval, right? Or some FDA approval of their drug. And so if you kind of the inexperienced trader sees this great news, right, positive news, and they buy this stock, right? The next day, what happens to the stock? The stock tanks 30 to 40%. Why did that happen? It's because subsequent to them releasing the news, they already had a plan to basically sell stock on the open market in order to raise money. And you can actually see this if you dig into the SEC filings, right? Securities Exchange Commission filings that these companies are required to file, right? So the day before this positive news comes out, um, this they put out an SEC filing that basically says they are going to basically sell stock on the open market, right? Boom, the next day, PR comes out, press release comes out. The stock opens the market at like plus 50, 100%, right? Retail is like, damn, this is going to the moon. This is going to the moon, right? What actually happened is that as retail investors are being attracted into the stock, the company is continuously selling shares on the open market. They are dumping on retail. They are using this retail demand in order to raise money for the company so that they can continue their operations into the future, right? And so retail investors, get sucked in, they buy at a high price, and they're down 30 to 40%. Someone who understands the agenda, right? Someone who understands the name of the game, sees this SEC filing that the company filed prior to this news release, and they know that the company is going to dump shares, right? So what do? They short the stock, right? Even though it's positive news, they short the stock because they know the agenda, the hidden agenda, which is that the company is diluting their own shares in order to raise money for the company, right? And so this is just one example of kind of how you can take advantage of these narratives in order to make money. And I'll try to find some kind of screenshots of where you can see the stock price and the SEC filing, you can literally see the company selling stock on the open market and diluting their own shares into like oblivion, basically. Uh, and so to sum it up, it's there's once you trade the markets and once you have experience in markets, you'll see that the idea of this efficient market hypothesis is just categorically false, right? And really kind of understand that the 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 financial markets is not this kind of clean and orderly. It's not this nice type of environment where assets trade based on their fundamentals and the company's prospects, right? There are constantly on a daily basis various type of manipulations and games going on, right? It's a very competitive kind of space where there's you I don't want to call them bad actors. I would just say that there's sometimes example being people and companies need to raise money, right? And in order to raise money, they need to generate demand and sell stock, right? And selling stock is normally very bearish for the asset because you are diluting the supply, right? And understanding kind of the agendas behind the stock market and the financial markets in general will allow you to be one step ahead of the unassuming and unaware kind of retail trader, right? You don't want to be the guy buying the stock just because quote unquote positive news has come out, right? You want to be able to analyze and think, why did this company put out this news at this specific instance in time, right? And that will lead you to basically digging into their financial reports, and you see, oh, like this company, if they don't raise money within the next month, they will go bankrupt. So what are they going to do once this positive news generates high demand, right? They're going to instantly sell stock and raise money.